Well, good afternoon. This is Mark Espy, also known as the Robin Hood Trader and partner over at MarketTamer.com. And this is the 26th of March, and we're looking at the Dow Jones Industrial Average. Before we begin, though, I'd like to remind everybody that everything we talk about is for educational purposes only, not to be construed as a recommendation to buy or sell anything. So we find ourselves continuing to power higher, yet the last couple of days, actually 3 days, have been quite telling. On Wednesday, we had somewhat of a dark cloud cover. Then we had a gravestone doji. Yesterday and today, a spinning top, very close to being a doji as well. The volume has increased a bit here the last several days, so there is some credibility to the candlesticks that have been printed here the last few days. So as I mentioned last week, I have a bit of a bearish bias because I think that we're a bit overbought at this moment. So where would we go from here? The most logical place would be to retest the 10,700 area. If we break down at that level, this consolidation back here in November, December should be quite stout support, as well as this little box that we find here in late February, which is about, the top of it is about 10,400. The swing low here is 98.35. We also have this swing high back here right at about 10,100. As I mentioned last week, it looked like that the stochastics was beginning to turn over, and in fact that's what it did. And we look like we're beginning to penetrate the 80 line and begin to go down. We do have somewhat of a bearish divergence in the histogram and the MACD, and just about ready to cross over here. Looks like it wants to in the MACD. So I'm continuing to feel that downward bias, and that we should retrace a bit and then at least retest this swing high that was put in January at about 10,700. Okay, with that, we're going to go ahead and take a look at the SPX.